The most urgent task internationally is to ensure that the debt architecture, the financial architecture, meets the needs of the developing world. As a priority, it involves mechanisms and approaches to alleviate sovereign debt burdens and debt service burdens on many developing countries that find it increasingly unsustainable.
Hello, this is the Weekly Tradecast, the podcast brought to you by UN Trade and Development. I'm Sarah Toms. We're exploring how major events are shaping trade and development and how that affects billions of people around the world. This week, we're looking at why we must rethink development strategies as economic growth slows and social discontent rises. From multiple crises and geopolitical turbulence to the impact of climate change, it's been an especially tough time for developing countries. The just-released Trade and Development Report says global growth is stagnating at rates not strong enough for developing countries to tackle the many challenges they face. That slow growth, along with high debt levels, weak investment and fragmented trade, are making economic divides even worse and fueling discontent. The report says the Global South has a unique chance in the green transition and to reshape global trade for the future, but that demands fresh thinking and more multilateral support to achieve sustainable and inclusive growth. Here now is Anastasia Nesvetailova, Director of the Macroeconomic and Development Policies Branch that publishes the UN Trade and Development Report. Well, welcome to the show, Anastasia. Now, the report mentions some positive signs, but overall the sense is that these are testing times with discontent on the rise. Why are we finding recovery so challenging? And what is the immediate and longer-term impact of all this disruption?
I think the answer lies through the keyword of discontent. So we see among the positive developments this year is that inflation is, albeit slowly, but is coming down in both advanced and developing world. Trade is picking up, although again not as robustly, and it diverges between trade in goods and trade in services. And overall, we are 5 years after the pandemic. Growth is restoring, but it's restoring at levels that are not only below the levels of a pre-pandemic, but substantively below the levels before 2008 financial crisis. The potential for growth had been eroded by not only the two major crises in the world, but also by the policies that were applied to deal with the crises. And the report calls for a comprehensive reconsideration of a policy mix that will be appropriate for now, the 21st century, for the new economy of the 21st century.
The need to rethink development strategies is a driving theme of the report. What does this new model of inclusive and sustainable development look like, though?
The short answer, we don't know. What we do know is that most likely it will not be the one model, because the lesson we're drawing from recent and current experiences is that there is no universal, if you want, silver bullet for successful development. If previously there was a consensus that, for example, trade or manufacture-led trade or industrialization is quite an assured way to success, now there are questions over that approach, deep questions, and they are associated with the rise of digital transformations, with the need for new green technology, with the rise of the service industries, robust growth of service industries, with the new cycle of financial and intangible investments. How these new forces and trends will be combined into these new models of development will very much depend on policy and international coordination.
How should developing countries be repositioning themselves?
We see huge demand for minerals, we see growing demand for critical commodities. We probably will see quite a lot of demand growth for agricultural commodities. This presents opportunities to developing countries in terms of their exports, how they navigate these opportunities and how they manage the financial gains from these sectors and how they embed these financial gains into their domestic economies is the key political question.
And what kind of support do they need?
The most urgent task internationally is to ensure that the debt architecture, the financial architecture, meets the needs of the developing world. And that, as a priority, it involves mechanisms and approaches to alleviate sovereign debt burdens and debt service burdens on many developing countries that find it increasingly unsustainable. So geopolitically, it's a risky moment. There needs to be a reform of global financial architecture to meet the trade, climate and production ecosystems that are rapidly changing. So what happened in the overall balance of the global economic governance is that as trade and industrial policies are rapidly going through change, the global financial system hasn't gone through change in the past 80 years. It's still governed by institutions and norms that were established exactly 80 years ago during the Bretton Woods Conference. So that architecture provides the foundation for how various financial and debt mechanisms work for the developing countries. A lot of them do not work. A lot of them do not now accommodate the interests and the needs of the countries of the Global South, simply because they were set up for a different time by different people. So that needs to be reformed. But they also need international policy coordination, not to be left out of the major processes that go on and are established now with new technologies, new investment areas, diversification away from manufacturing and green technology.
Where are the biggest opportunities for the Global South to help shape the green transition and the trade flows of the future?
The big opportunity is clearly with the demand for green energy technologies and critical minerals in particular. And we see projected to increase by 2050 substantively, and we see countries benefiting from it. Those countries that have the majority of those resources, however, need to develop policies to balance the potential gains from the exports and investor interest in the extractive industries, so that the financial gains from the new boom or from the new type of economic growth are actually shared by their own societies. Because that's the lesson we learned from before. Mostly, those previous gains from commodity boom were not shared, they were not embedded, they were not invested back into the economic transformation and institutional robustness of their economies. They need to take stock of those mistakes and to redesign policies for the new extractive age, if you want. They also need to adapt industrial strategies to encompass all economic sectors and not just manufacturing. It's very clear that there is trade in services is growing more robustly than trade in goods. So new policies, new investment and new strategies to absorb labor and skills into those service-oriented sectors, including those services that are not tradable, such as education, care, public services domestically, they need to be put on the agenda and they need to have investment and support from the states.
Rethinking and repositioning sound great, but how do we get to that better future in a world that seems to be pulling back from globalization and multilateralism?
Complex question. I think it's important to restore confidence in multilateral mechanisms. And one way to restore confidence is to ensure that the current institutions are actually accountable for the consequences and some costs that are imposed through them on the developing countries. And let's not forget that we are now facing geopolitical fragility that affects all participants in the global economy, advanced and developing. It affects trade, it affects investment decisions, and it also affects how we understand sustainable future. One of the biggest risks today is the division of the world into the economies of the rich, the economies of the large, and the rest. And we already see some divergence in growth, in industrial policies, in trade measures across these three groups. And if it's allowed to fester, if it's allowed to continue, then the space for collective action, the space for multilateral institutions, but also overall economic stability and prosperity will be severely undermined. So I think multilateral institutions need to make a serious effort to overcome this trilateral division. One area is to adapt the financial architecture to the rapidly changing architecture of trade and industrial policies, because that's a historical asymmetry that is increasingly shaping where money goes, where risks are, and which countries are included in the international trade and financial system and which ones are finding it very difficult to integrate now. Problem, for example, one manifestation of it is just how saturated and how concentrated key industries are becoming. So the separation into the large, the rich and the rest also concerns key markets that are increasingly controlled by just a few corporations. You're talking about markets for food commodities, for minerals, but also for services. The vast majority of big corporations that are actively shaping the world service trade are headquartered only in North America and a little bit in Europe. The developing world is very underrepresented in this new type of economic exchange, and it needs to be put on the agenda for discussion and examination and analysis. We need to have much more understanding and sharing of data for transparency of the market and regulation, and we need to have a concerted, open dialogue of policymakers and decision makers. How do we coordinate this changing economy that risks to be even more unequal than it is now?
That was UN Trade and Development's Anastasia Nesvetailova, who was this week's guest. Tune into the Weekly Tradecast next week and every week for more insights on the most pressing issues around the world of trade and development. There's even more on our website, UNCTAD.org. I'm Sarah Thomas in Geneva. Goodbye for now.